If you trade Forex and stocks, this is for you, as in today's video, I will show you a smart hack that would gain multiples of pips in the market, and the best part, it's super easy and beginner friendly, so stay till the end if you want those secrets of gaining pips in the market. Okay traders, we already know how we start with the indicator application. First, we would have to add our indicators to the chart. Now for this strategy, we would be using two moving averages. The 21 moving average together with the 200 moving average, but instead of applying two moving averages to the chart, bring up your indicator and strategies panel, and search for the TMA overlay. This one right here by RDFX Seed, add it to the chart. Now we can see that this indicator has four moving averages, as well as having a Williams fractal signal attached to it, identifying the highs and the lows of the market. But we won't be using all of its script, we would be modifying the indicator to pick out the major script we would be using for this strategy. So when you bring up the indicator settings panel, on the style, I want you to uncheck the 50 SMA and the 100 SMA. So we would be making use of the 200 SMA and the 21 SMA. Then we would be unchecking these options here, as we do not need them for this strategy. But you can check them out in your spare time as they are useful as well. Click on the OK button when you are done. Now we can see that we only have the 21 smooth moving average and the 200 smooth moving average on the chart. And for this indicator, since we are going with the trend, the rules for identifying trends are easy. When the 21 smooth moving average is above the 200 smooth moving average, it indicates a bullish trend. And when the 21 smooth moving average is below the 200 smooth moving average, we are in a bearish trend. So here is a long position we would have profited from, and here is a short position we would have profited from. But this is not how we take trades using this strategy. We are showing this to make you understand that when the market is in a bullish trend, we need the 21 SMA above the 200 SMA, and when the market is in a bearish trend, we need the 21 SMA below the 200 SMA. Now, let's add our second indicator, as this is what will be determining how we enter and exit trades in the market. So when you bring up the indicator search panel, I want you to search for the wave Weiss volume. Then scroll down and look for the indicator with Lazy Bear, as this indicator was scripted by a well-known genius on TradingView. Now this is a volume indicator that indicates the volatility of a trading pair in the market. As you can see this long wave volume signal, and we see had a long sell. Here again, we had another sell volatility, which was due to this selling pressure. Here again we had another sell signal. And the same goes for the green columns, which represent bullish volatility. So here we see we had a long buy. Here again, we had a long buy. And here again, we had a long buy. So the question now remains, how do we take trades in this market using these TradingView indicators? Before we continue, please note that we are on the Euro-Australian dollar, and this is the 30-minute time frame. Why we made note of this is because we would be making use of the 30 minutes and 5 minutes time frame in order to become very profitable using this strategy. So now, we would be adjusting the volume indicator to better understand how we make use of it. So when you bring up the indicator panel, under the style, I want you to increase the brightness for the first plot, then change this to a column. Then do the same for this second plot, as we would be increasing the brightness, while also changing this to column. When you are done, click on the OK button to fully apply the settings. Now I hope the visualization for this indicator is much better now. So how do we sell trades for a valid sell signal in the market using this strategy? First, we have to make sure the 21 SMA is below the 200 SMA, and when we have this, we already know we are on a bearish trend and prices are more likely to keep declining. Then secondly, we make use of our volume indicator to enter trades. First, we would check the values of the last bullish column on the wave volume indicator. So right here we can see that the last column was at 48,772. Now we waited for our next set of green columns after the red columns right here. Now, we will have to monitor this column till the values of the wave volume is higher than the values of the last column green right here. So since our last column right here was 48,772 in value, then our next column is 53,544, we can notice that it was at this green column that the values of the volume indicator became greater than the values of the last green column. So what we do at this point is that we have to take our trades, as this is our trigger candlestick, but we won't be taking trades on the 30-minute time frame. What we have to do is to go down to the 5-minute time frame and hunt for our entry. Now in the 5-minute time frame, what you need to do is very simple. You just need to wait for the price action to close below our 21 SMA. Once the price action crosses and closes below the 21 SMA, we now have to enter our trades. So let's check how this goes. So we can see right here that price action crossed and closed below the 21 SMA on this candlestick. So what we have to do is to place our trade for entries. Now for the stop loss. The recent swing high is not advisable for the level of stop loss because we are taking higher signals, a lower time frame. So we want to make sure that we are in line with the volatility and momentum of the market. So what I want you to do is to add a third indicator to the chart. And it is no other indicator than the ATR stop loss finder. This one right here by Verifit. So we would be using the default settings for the buy stop and sell stop in the market, and the default settings is at 1.5 times the values of the ATR. So whenever we are on a bearish trend, we make use of this as the higher ATR as the stop loss, and whenever we are in a bullish trend, the lower ATR is our stop loss level. So since this is a sell trade, we place our stop loss at the higher ATR stop loss level, and for taking profit, I always use 1.3 times what's being risked in the market to take profit. Now let's see how this trade entry performed. Now we can see that the price hit our profit level at this point. And this was a successful trade. Now what we do next is this. We head back to the 30-minute time frame and hunt for our next trade. So we can see that this was profitable here. We would now hunt for the next trade. Since we have taken this trade successfully, this is a new bullish column. So we want our new bullish column values to be higher than the last highest bullish column right here. So when the value of our next green column gets higher than the values of this column right here, we hunt for another sell position. So let's see, we have this value at 63,434, and the current value of this is 37,218. So let's wait till our value gets higher than this before we hunt for a new sell trade. So we can see that our values here are now greater than the values here, as we had 63,430 for, well, what we have here is 63,809. So we see it is greater in value by a few fractions. Now again, we would have to go down to the 5 minutes time frame to hunt for our entries. And when we get to the 5-minute time frame, it's easy just like the previous trade. We would have to wait for price action to cross and close below the white SMA. Now we can see we had our trigger entry at this candlestick. So now we have to open another sell trade at the close of this trigger candlestick. And as usual, our stop loss will be at the higher ATR level, and for taking profit, we still maintain the 1.3 times what was risked in the market. Okay, since we can also track the taking profit at the 30 minutes time frame, let's head over back to the 30 minutes in order not to miss our next trade when the conditions are met. Now on the 30 minutes time frame, we can see that the last value of this is 92,430, so we would have to wait for the next set of green columns will be greater than this 92,430. And also keep in mind that we are still on the bearish trend as the white SMA is still below the red SMA, so let's watch how this open trade performs while we keep watch out for the next signal. Okay, right here, we can see this open trade is another profit that would have been bagged. So we can notice that right here, the last value of our bullish column is not higher than this, as this was not a valid entry to hunt for trades. So for the next entry, we would now have to wait for the next set of new green columns to be higher than the previous set of the closed green column. By doing this, we avoid taking poor signals in the market. So when we get a new set of green columns that gets higher than this 10,789, we would then hunt for the next sell trade. So let's wait till the values get greater than this column. So we can also notice here that the values of the just concluded set of green is not greater than the previous column. So we would now have to wait for the next set of volume to be greater than this. So by now, I am guessing you should have understood how we properly take trades using this strategy. For those of you who don't understand yet, we take trades when the last set of green columns, when we are on a bearish trend, is lower than the current value of the new set of green columns. And when it gets lower, we hunt for the trade entry. Or we still have the 21 SMA below the 200 SMA. So let's wait on the next green column that will be greater than 4,596 before we hunt for a new sell position. Okay traders, we can see that we got a new column here, and the value of this column is 7,943, while the last green column is at 4,596, so we can see that this column is greater than this. Now what we have to do is this, we go back down to the 5 minutes time frame. And as we can see here, while on the 5 minutes time frame, we have price action below the 21 SMA. When you get a situation like this, we have to wait for the price to close above the white SMA, and also wait. If price then closes below the 21 SMA, we then look to open a sell position at the trigger candlestick. So right here, we can notice that the price closed above our white SMA and then again closed below the white SMA, so this candlestick is the trigger for a sell position. Now let's monitor how this trade performed. The stop loss remains the high of the ATR indicator, and profit level also at 1.3 times the risk. So since we can also track this trade at the higher time frame, let's go back to the 30-minute time frame and hunt for our next trade. So see our current trade at this level. So we would also be waiting for the next trade entry to keep profiting from this bearish trend. Okay traders, we can see that this trade was also a winning trade, and you can keep going on and until the white SMA crosses above the red SMA before we switch over to taking only buy trades. So because of time, let's go over the long position to see how this trade performed on a bullish trend. Now for a valid buy signal, we can see that we just got a new cross as the white SMA crosses above the red SMA, so this means that we only take long position trades. And how do we take long position trades is exactly the opposite of the sell. We only take trades when the next set of red columns will be greater than the last red columns on this set. So right now, let's wait for our next valid long signal. So we can see that right here, this is at 90,551. Let's see if we would get a value higher than this before we hunt for our buy. So we can see we did not get any value higher than that, as this set of columns comes to an end. So there is no valid trade hunt at this point. So we would now have to wait for a value higher than this 23,431 before we hunt for our next buy trade. So we got a value greater than this at this column. As we can see, at the last red column is at 23,431, while this value is at 24,725, so this is greater than the last red columns. So we would now hunt for the buy trade at the 5 minutes time frame, and we can note that our 21 SMA is still higher than the 200 SMA, so as we move back down to the 5 minutes time frame, and since we are going long, we want to wait for the price action to cross and close above the white SMA. So we can note the trigger candlestick at this point. Now we then have to place a buy trade here. Stop loss at the lower ATR, while taking profit remains the same 1.3 times what we risked in the market. So let's move back to the 30-minute time frame to hunt for new entries while waiting for the open trade to either hit stop loss or take profit. So traders, make sure you take this very seriously if you really want to become a profitable trader trading the Forex market. And that's it for today's video, traders. Thanks for watching, and see you onto the next one.